join you?
Huh?
May I join you?
Yeah. We found out here.
Want the couch?
I'll take the couch. Either way.
Yeah.
That's fine. Thank you.
Hi, everyone. We can see that the topic of the panel is every dollar, everywhere, a lot of drops to drink. So it's a very interesting metaphor from Shakespeare, saying that there's a lot of liquidity, there's a lot of opportunities, but since then, there's still some traps here and there in different jurisdictions, the whole chain. So we are here to dive deep and understand where could be some improvements, where we have already today. So without any further ado, I would like to ask my panelists to introduce themselves from a perspective of where they sit in the ecosystem, a payment ecosystem, and where they see the opportunity. I will start with your own.
Thank you, Anna. I'm Roeland Goldberg, and I'm with zerohash. Zerohash is an infrastructure provider which ensures that institutions and companies are able to connect to blockchain infrastructure in a very seamless way. Zerohash does that through its own infrastructure, custody services, and licensing arrangements.
And you just got their license, EMEA license, right? So congratulations.
Thank you very much. We're very proud to have achieved that. We had our MiCAR license since October last year, and last week we received the EMI license, so that's a big step for us.
Yeah, congratulations.
Hello, everyone. My name's Martins. I'm CEO and co-founder of Gravity Team. Gravity Team is a proprietary trading firm at the core of it. We trade around 1% of all crypto volume in the world, and currently we are expanding our business into the payment space. So we have an OTC desk that facilitates stablecoin to crypto payments to basically streamline global payment systems.
Yeah, thank you, Adam.
Sure. Good morning. Adam Israel, co-founder and chief compliance officer at Mesh. Mesh also is an integrated comprehensive instruction orchestration layer for DeFi and fiat payments. We're a neutral platform that just is an embedded solution that provides payment solutions across any network.
David.
Nice to meet everyone. David D'Amico, Banking Circle. I help spearhead Web3 sales. Banking Circle is a global payments and FX bank with about 1,000 institutional clients.
So we are here at Stablecon, and it's an interesting point in time where there's a shift in the discussions, the different players, and we had an opportunity during our prep chat to discuss how the whole ecosystem changed, how the discussions, the positioning of the players in Web3, let's say, and the traditional players has changed. So could you share your observations, how you've been treated back then, and how the conversation evolved now? Anyone who would like to start?
Yeah, so Gravity Team has been in space for quite some time. So we're in the business since 2018, and we started to look more at B2B space 2022. And so when I went to these so-called these fintech conferences, say Money 2020 or Singapore Fintech Festival, and pitched the idea of fueling the payments for TradFi companies with stablecoins and crypto, oftentimes I got some shady looks and a lot of discontent about it because, well, honestly, people just these companies just could not really use crypto systems due to their compliance. But now, after 2024 November, after the Trump basically got elected, after the election in the United States, you could really see that there was a big shift taking place, and suddenly all the fintechs are very much open to engage and understand how they can leverage this technology. And now the conversations are much more in depth, and at times it even feels that the fintechs already know too much about crypto because their arguments and their requirements are very specific and tailored to their needs, and they also understand what crypto money movement means and what are the benefits and weaknesses. the differences in pricing. They already understand that the fast settlement, the weekend settlement, all the compliance nuances. So the conversation has got a lot more detailed, a lot more educated, and I think that's the great thing for this industry going forward.
We've talked about different use cases that you see, Roeland, in your day-to-day work, how the DeFi comes into place and how you could see that could be implemented. Is there anything that you would like to share in particular?
Yeah, I think to connect to your remarks earlier, the types of discussions we're having with our existing client base, which is largely in the US as we're still building up in Europe, is getting much more sophisticated in the sense that the discussions we're having are with regulated financial institutions, investment firms, and these parties are much more advanced indeed in their knowledge about blockchain and crypto services and payment services that they want to connect to. And this is where we see a big shift in discussions where indeed prior to November 24, crypto services were a bit of a niche, a bit of an unusual product to add to the product base of more innovative companies. But now we're having extensive discussions with really big name payment service providers, financial institutions, GSIBs, etc., who are interested to connect it to blockchain services and treating that as a very respectable product that they want to and feel that they need to be able to offer to their customers. And that is entirely different. To your point on the use cases, with respect to the classic crypto space, the brokerages, trading platforms, we provide those services in the US and in Europe, and we have that fully operational. But the newer use cases we're discussing are more in the payment services space, investment firms, account funding, etc. And that's more greenfield in a sense, that the products aren't generally live, and we're still talking through the settlement flows and how that will be implemented in an actual practicable way, making use of the regulatory permissions that we have.
Adam, we did discuss there a bit of how you've pivoted your company, and I think that maybe also shows how their ecosystem changed. You used to be in a TradFi place, and then you had an idea to take all your network and ecosystem to a completely different platform match now. Is there anything that you could share with everyone here?
Yeah, sure. No, I mean, I'd like to just kind of chime in on what my colleagues are talking about with regard to the changes we've seen, certainly in the last couple of years. You know, prior to 2026, I mean, most of the conversations and commercial relationships we built and developed were with you know, major enterprise DeFi platforms. And in 2026, it's really completely shifted with regard to the conversations and integrations that we're having in TradFi and this bridge that's starting to occur, and that validation. A couple examples is our integration with Kalshi, for instance, which is federally regulated prediction markets. So again, you know, just being able to service a platform that has regulatory obligations, I think is a key message there. We're a super validator on the Canton network, and we're currently working with Google around their agentic payments proposal and just, you know, around automated AI. We recently signed our first bank. I mean, it's just interesting to see, I think, the maturity in our space and how that bridge between DeFi and TradFi, and I guess we'll talk about the stablecoin sandwich. I mean, just how that is building out and growing at an extremely, extremely rapid pace.
This TradFi representation here.
Yeah. Yes. So I've been in digital asset banking for about a decade now too, and it's amazing to see how far it's come and evolved. I remember sitting with a Tether exec when their market cap was under 3 billion, and now to see, you know, the tech go from an algo trading coin to, you know, disrupting global payments has been really, really cool to watch. it's a real use case that gives institutions a way to speed up their payments, lower the costs without rebuilding their entire tech stack. It's been super cool to be a part of.
So connecting to their sandwich, right, their stablecoin sandwich, this is a concept that we discuss quite often and during our chats. So where we have our fiat in before and then the stablecoin and then fiat out, which they're converting to the local currency. So you guys obviously part of that chain. So would you share what's working well, where there's need to be improvement in that specific, well, say the flow of our funds?
Mm-hmm. Yeah, so when you look at the stablecoin sandwich, first of all, where it works well, I think it works well the best in regions where you have the biggest friction today in traditional finance. So those are countries with poor correspondent banking, those are countries with capital controls. So typically, emerging markets have the biggest need for efficient payments with the stablecoin sandwich. Around 66% of stablecoins are actually, 66% of stablecoin supply comes from emerging markets. So that's an interesting statistic there. And if you look at when you look at the challenges of the stablecoin sandwich, well, if you would take it from the burger perspective, then the buns are the on and off ramps. Stablecoins is the meat, like the stablecoin payments is the meat. And I think what we're still figuring out is the secret sauce or the sauce that keeps everything together. That aspect is still not entirely worked out. But what I mean with that is there's still the kind of unified APIs that would allow to execute all these transactions in a simplified fashion. They're missing, so you have multiple entities participating. The liquidity is quite fragmented, so market makers, liquidity providers like us really need to put a lot of work in there to make sure that the size that the clients demand can be executed. And then, of course, there's also different compliance needs at different parts of. Well, typically the compliance needs are more at the bond side, on ramps and off ramps, and the information needs to be passed over and fetched so that it would be efficiently streamlined and costs still remain low. So there are some challenges there, but these are really I would say these are generally cooperation issues and some regulation issues, but all of that is being solved as we speak today, right now, by companies like ours and by other companies, because again, this shift just started relatively recently, 1.5 years ago, and work is underway.
Maybe to add to that, one of the interesting things we see with the stablecoin sandwich is that it works in very specific cases. At zerohash, our US teams support, for example, remittances from people in the US to Latin America, as well as gig economy payments for tech firms to staff around the world. But in each case, it really requires a lot of effort to set up the first flow and to make sure that that off-ramp is fully functional and operating and that the recipients can actually use those, US dollars in most cases, in their daily lives, which makes it complex because it's not a product you just set up and all of a sudden you open up Africa as a recipient area. So you need to really build that out on a country-by-country basis.
Yeah, I could just piggyback on my colleagues here. So, my point of view is you're only as good as your on and off ramps, right? If you're still on legacy systems, batch processing, you close at 5 o'clock on a Friday and off holidays. It's not going to keep up with the institutional needs. So to be able to have one integration, one API, institutions don't want to have 10 different layers and integrations and partners, but to have one unified platform, one API that kind of abstracts that complexity of what's happening in the back end is where institutionals will win and the direction Banking Circle is headed.
From a connectivity and networking perspective.
Yeah, no, I have some, I have some comments on this too. Look, for the first couple of years that we were running Mesh, I was chief operating officer, and that has switched the last 2 years to chief compliance officer, and that kind of speaks to, I think, where we think the special sauce is. To your point, I think it's a great analogy. And to us, that special sauce is oversight and regulation and compliance. I think that is kind of the last mile. It's a long mile. Things are definitely changing, but I think everyone's trying to figure out to make sure that there's proper transaction monitoring, proper licensing, proper regulation, KYC, KYB. And it's a big challenge because we're in a global marketplace and it's jurisdictional. And we also have an office here in the Netherlands is our EU regulator. And they have their own set of rules, and I'm faced with that across the globe in different jurisdictions, and trying to make that connectivity and be able to have a compliant infrastructure that will satisfy this transition and bridge to traditional financing, traditional platforms, I think is kind of this last mile that needs to be closed, and we'll see how long it takes to get there.
But that's where the banking, right there, the TradFi play quite a pivotal role, right? So in the last mile, where you put the fiat into the local currency, that's your quite of an important role. And then I assume the compliance and all the legal aspects of how to do that's where maybe the main opportunity lies in the whole chain. Or what do you guys think?
I think so, to a large extent, and this is where firms like ours really are able to offer efficiencies to our clients, because we're able to set up fully compliant onboarding processes for our customers and for our customers' customers, and that will give them the comfort that they are providing a service that is cross-border, but at the same time meeting local requirements. So we really make an effort to do that, hence the fact that we find compliance being really one of the key factors that we need to make sure that we are fully on top of, and that we're able to explain that to our clients and regulators.
Yeah.
Yeah, if I may add, I also do believe that the last mile delivery sort of belongs to the traditional players. They have been doing this for years. They have all the licensing, and honestly, the local delivery, local banking systems typically work all right. Say you need to send money in Europe from A to B, it works. Even if you need to send money in Indonesia or Thailand or Philippines from A to B within that country, you don't have too many reasons to complain about. Now, the problem always comes when you want to send money from Latvia to Indonesia, where it needs to cross borders. This is the part. The part where the money is exiting the payment system, the local payment system, and entering international payment system. This is the point where stablecoin fueled systems need to come in, and they are already coming into play, and they are virtually revolutionizing how long it takes, how fast it can be done, when does it work, how much these payment companies need to worry about their treasury, because they don't need to worry about it too much anymore. When payments are instant, they don't need to pre-fund the accounts. So I think that's the part where stablecoin companies, crypto native companies need to play, and they need to find a way to work with these companies where they take care of some parts of their compliance, and they're more worried about the compliance from B2B perspective, in my opinion.
So that's where you think there's a collaboration could improve the full ecosystem, that part where everyone will kind of work together to make sure that their user experience is seamless and instant, more or less, into the cross-border transactions.
Yeah, I do believe so, and I do think that that there are multiple scenarios how world can work out in the future. We know back in the days, some few years ago, the crypto industry where I'm coming from, there were three options. There were three scenarios. There was also the libertarian dream option, where everything is offline, everything is on blockchain, and even your grandma has the private keys to her stablecoin or Bitcoin holdings, and she would trade on DeFi exchange or something like that. Now this option seems to not be the reality, not be the likely reality in the future. But now you have the two options left, where you have some kind of mix in between, where you have quite some crypto companies like Coinbase, Kraken, and Binance, and so on that take more of a role of a bank. And through Clarity Act, this is now kind of being determined on to which side the tides will switch. And then you also have the third option, which seems to be the option that is taking place right now, is the option where like stablecoins and blockchain settlement rails are integrated into these existing front ends, into the existing companies. So, and the likely reality and the likely outcome, what end users will see is, say you are using your Revolut app, or you're using your Wise app, or you're using your banking app, and when you're sending money abroad, when you're moving it, you will have almost the same experience. It's just going to be better. It's just going to be faster. It will be cheaper. You might need to answer less questions, because those questions already get answered by themselves. But the user interface as such will not change a lot. So it's one of those two options, but in both of them, close cooperation will take place between crypto and TradFi.
Anything to add? Maybe
TradFi. No, I think we're all just talking interoperability, multi-rail, multi-channel. For large volume cross-border settlements, tokenized assets have earned its seat at the table. As Martin said, for domestic regulated payments, SEPA Instant, faster payments, are key and do the job very well. And then on the FX market, and it's going to be, I think, will be a blend of the two.
It'll be interesting to see also what kind of impact Euro stablecoins have once there's a little bit of liquidity there, to see whether there's much more retail adoption at that point within the European market. Not that making use of USD stablecoins is a huge step for most people. I think for daily life adoption, that may be quite a shift. So once there are larger scale Euro stablecoins available, I'm optimistic that will help Europe move forward in becoming more part of this new movement.
And how the other products develop to help you spend those stable coins at point of sale or through your debit card as well.
I think Martin's laid it out well, and you mentioned point of sales, and we're working with PSPs and PayPal and etc. But what we're finding, like our position is, it's just neutrality. I mean, our solution is called smart funding, which basically means we don't care, in what currency someone wants to pay in and what currency somebody wants to receive it in. So we don't have any preferred solution, and we're hoping that's the way that it winds up. Similar to like a Visa or MasterCard, the customer just goes, they don't understand what's happening behind the scenes, and that's our intent, to create that infrastructure and a whole ecosystem amongst all of us in order to do that. Ultimately a customer can pay in whatever they want to hold, and the receiver can receive in whatever they want to receive in, instantaneously, 24/7 cross-border.
Do you think that's around the corner, or is it going to take a while to get there? Yeah,
it's a great question. My answer goes back to why I'm Chief Compliance Officer. It's I think the regulatory, we're going down that path, and as the challenges that we're finding with regard to enabling that connection. The technology's there, but just being able to really validate the oversight and the regulatory compliance is a work in progress. And you mentioned Clarity and Genius Act. I mean, those things are still quite ambiguous.
I think also adoption, right? Like if you talk about the emerging markets, you might see like a much better rate of adoption in some of their regions, like Turkey, for example. They use stablecoin as a store of value asset, so they don't use it on the terms of a transfer. They just store their values in stablecoin, and the emerging markets might come there first, potentially. And we kind of, now in the western part of the world, we're in Amsterdam, and the conference in the US led. So I think we might, please challenge my statement, we might come later, even though we have the tech, we have intentions to kind of develop it and make it sure it's regulated and it's compliant. But adoption from end user might be slower because there's so many options already that are working. For the user, as you guys already mentioned, it might not make any difference how the money is transferred. As long as it's seamless, as long as it's instant, that's the main kind of goal. Don't even see how it works. It just seamlessly happens. But feel free to challenge my sentence.
No, I mean, I think David made a great point about that stablecoin has found its seat at the table, certainly from an institutional standpoint, right? I mean, that's already done, right? And it's even exceeding Visa and MasterCard payments at this point from a volume perspective. I don't know if I'm going to ask you a question if I could. I don't know if again, what we're trying to do is now bridge that gap to the retail, to the retail space and get that acceptance. So I'd be interested to hear what you have to say with regard to how that bridge could be, and what's the future of that bridge.
Yeah, so I mean, we're at a stablecoin conference, so I don't really have to pitch the benefits of stablecoin, but from our point of view, we have merchants and institutions, NBFIs, right, corporates who want to just unlock liquidity. And it works very well through our real-time FX and over real-time payments where we are direct. This is just another tool for them, right? To be able to see 24 currencies that you are able to transact in, and then see a correspondent stablecoin right next to it. Give them the options to how they need to do it. So it's a real demand. It's there. People are asking for it. They need it, and it's continuing to grow and adopt. I don't want to step out of line on my lane on the compliance end, as we have our compliance expert here, but it's bringing that into one regulated environment, because what you're doing in Europe is great with what we have here with MiCA, but that's not a global standard as of now. So bringing everybody to agree on those standards and to help bring it more mainstream.
Mm-hmm. Yeah, like we mentioned, that it's one of the tools that you mentioned, David, and I see the clock is ticking, and I want to talk to you about more and more, but please take a moment and just reflect what has to be done for the stablecoin to become like a boring kind of instrument that everybody just they have that on display like a stablecoin or anything else and just click that one. What needs to be done from your perspective that it will become like a regular boring, let's say, instrument for everybody just to apply?
At zerohash, we're working really hard to build infrastructure that can be used globally, so that our clients are able to access markets regardless where they are. And we focus very much on having that regulatory footprint that we need to have to do that for top-tier clients. For us, it's incredibly important that there's regulatory equivalence, because as long as there are diverging rules and regulations, it's very difficult to roll out a harmonized product globally. So I think that that's really going to be a key. There will be a movement, there will be consolidation of rules and regulations, there will be more cooperation, but it will take time, unfortunately. For us, it could go a lot faster.
Thank you.
Well, for stablecoins to go mainstream, for stablecoins to not be boring, they need to go mainstream.
Oh.
And when stablecoins will go mainstream, then we'll have some statistics changing. Today, the average cost of cross-border remittance is still around 6%. Now, sending stablecoin from point A to B costs much, much less than that. So when stablecoins will go mainstream, I want to see that number going down dramatically. That's like kind of my personal mission. And yeah, there's a lot of cooperation that needs to take place between the parties to get there. But really, what is necessary is time. Right now, the momentum, if it continues as such, we will get there within 2 to 3 years, I believe.
That's ambitious.
Yeah, I mean, look, I mean, the blockchain, which is a verifiable, permanent ledger system, is exponentially better than the system we've had, the systems we've had for the last 100 years. So it's got to get there. It's going to get there. Not to sound like a broken record, but it's about the safety and the access to it. So hopefully sooner rather than later, there is going to be some kind of good housekeeping seal of approval with regard to verifying source of funds and oversight. And then once that happens, then we're just living in a whole new paradigm.
Yeah, I just think that's the theme of standardization, right, between the issuance process, the redemption process, between blockchains, tokenized rails, fiat rails, kind of all have to be standardized amongst the industry and around the world. When it becomes predictable and regulated, and it becomes boring, and then institutions love boring. So.
Yeah, it's predictable indeed. I'd like to thank you very much for sharing your knowledge with the audience and everyone who wants to grab your attention. I think they can find you in the audience, and thank you very much. Thank you as well, the audience, and I think we will have to move forward.
Thank you.
Appreciate it.